So I just wanted to hop on here real quick and kind of go over the Ivy flushes again. Another one of my favorite strategies, one of my favorite tools, and something that has an incredibly high hit rate. So every day I wake up and I post these pre-markets, and I kind of give a breakdown on what I'm looking for and what needs to happen. And today, obviously, we had NVDA, Snowflake, and Baba earnings. So I'll show you first NVDA, then Snowflake, and Baba. Right? So NVDA, I have the 166.50, 172.50, and 180 are the upside. If we don't hold 166.50, you go to 160, 155. I talk about the ER and the situation with it, how it wasn't great, and they have the buyback. I tell you 175 closed at 6.30, should open around $1. 180 should open at 0.6, 0.75. Buyers should step in my opinion. A lot of people keep asking, like, how do you know if you're buying calls or puts on earnings, like on the next day? How do you know? And I give them the same answer every time, and I don't think people really, they're not grasping how simple that part of it is. This is open. This is the opening candle, right? 9:30 Eastern Standard Time. Right here. I mean, you get the biggest buy volume of the whole day. So what do? I buy calls as soon as I see that candle light up, and what happens? You go for a ride. And where does it go? In the money. What were the levels? What were the levels that I had? Well, they're right here. 166.50, 172.50, and 180. What happens? 166.50, 172.50 in this range, then you get your 180. What do those calls do? Worthless at 15 bucks all the way up to 360. The calls end up going 1,000%, right? I think I have a picture on here, and they go 1,000%, right? So it's just one of these things where that's a $1,000 gain, 100%. Like, it's just one of these things where it's so simple. But a lot of people just don't understand the following the volume. So hopefully this video will kind of give you 3 examples that make you understand, right? 35 bucks average fill price, those NVDA 180s, they go to 350. So what happens? You get 1,000% return on that. So the next example, guys, is Baba, right? I say Baba 90, 95, 100. If it doesn't hold 90, you go to 85, 82, 50, 80. Watching the 90 call, closed at around $1, should open near 0.5 to 0.75. Can gap with volume, in my opinion. I took cheap hundreds overnight at that 14 level, so watching that too. What happened? How do you know which way to play it? Same situation, guys, right? 9:30 happens, small volume, and then you get your largest volume of the day. Why would I play puts? What would make me say downside here when you're getting increasing volume and then volume accumulation? What happens? Let me see if you could see this, right? I say you get over 90, right? So first you get 90, 95, 100. You get your 90 break right here. You go straight to 95 almost, right? Right, we hit 94.13, right? So you get that 90 break, you can go straight towards 95. I'm hoping for a 100 break tomorrow, but there was no reason to ever consider puts here, right? I mean, off open, right here at open, 9:30, the first candle, low volume, second candle, massive volume. But there was no reason to consider puts here, in my opinion, because of this buy pressure on this candle. Clearly massive volume, most of the day by far. These things went, yet again, guys, water to wine. They were worthless. They were literally worthless at $1. It went to 32. Worthless to worth a lot. And a lot of people keep saying, I don't know how to play it. I don't know how to play it. That's Snowflake, sorry. I don't know how to play it. I don't know what to do, what I'm looking at. You're looking at the volume. That's all that matters, guys, what is the volume showing you? Baba had good earnings, calls opened worthless, and then they turned into worth a whole lot because this volume comes in, right? Why would you be buying puts, in my opinion, when you get massive buy pressure? You shouldn't be. That's just my opinion. I wouldn't be buying puts on this name. And I'm using a lower time frame. This is a 5-minute. Usually I trade on a much higher time frame. But to give you an example, to show you like ideally what you're looking for in this volume, the same way NVDA had that massive volume at open on that first candle and then went all the way in the money. Well, these 95s basically went in the money, and the hundreds are now $5 out the money, which is 2 strikes versus being 5 strikes out the money. So yet again, guys, that's 200 to 400% depending on your fill. Obviously, I didn't catch directly at the bottom. That would have been awesome. But NVDA, 500 to 1,000%, right? BABA, 200 to 400 or so. And I'll show you Snowflake, same story. Now, this example is Snowflake, right? So this is a little bit different to the extent that Snowflake obviously went 200+%, 135. Where'd I say it could go? 120, 127, 135. 135 closed at 9, should open around 0.75 to $1. So with Snowflake, you'll see that the volume didn't come in right at open to the buy side. So you'll see 930, you get sell pressure. For me, this risk reward wasn't enough to decide, I'm going to buy. Like, this risk reward from open at 120 down to 115, that doesn't warrant, in my opinion, puts, right? Because you didn't even break pre-market low. So for me, it's like I don't really like puts there. Buyers are still stepping in, buyers are still stepping in. It's not until about lunchtime where you really get the buy volume, the accumulation happening, and then your real move. And you'll see what I was talking about, right? I say 120, 127, and then you could see 135, right? We had a high a day at 134.40, just so you know. So yet again, you get your move, 122, 127, and your move towards 135. I was off by, 15 cents. Or 80 cents, 83 cents from the highs. But literally just look at this volume, right? You can see the volume accumulate. This is a lower time frame, still using a 5-minute. You could even change it to 3. But you can see the volume accumulating. Like, this doesn't warrant puts for me F open because they buy it up and buyers just step in. It's just I'm not playing this range right here. When I start seeing this volume accumulate and it start to get really heavy on the buy side, and calls are sitting there basically worthless, it allows me to be like, okay, this is really interesting. And I'll show you what the premiums did yet again, guys. $22 to $3.42. So they went from 22 to 3.42. I called it at 40 cents, right? So that's that pop. Called it at 40 cents. They went to 3.40. I called BABA anywhere from 6 to 10 cents. I had some yesterday from 14. They went to 35. I called NVDA off open at 35. They went to 3.50. So that's 3 names right there where you're able to really, really, really make some really good money. It's just a matter of following the volume. So the volume comes on the other line. Snowflake 135. BABA 200%, 200%. NVDA 350%, 98 to 250. I could go through this all day. Here's another example yesterday with DKS. Oh my God, first ever bagger. Same thing with JWN. They both had earnings, right? You get your BABA and you get your Snowflake again, right? So these things are available all the time during earnings season, but earnings season isn't around all the time. So tomorrow I'm looking at Marvel, Costco, and Zscaler, and I'll write out my levels. I'll write out my list. You see 450%. He turned $26 into 143. So tomorrow, like I said, I'm looking at Marvel, Costco, and Zscaler, and I'll type out my levels. And I mean, it's just, NVDA 112%. MU, this was an overnight I took in sympathy to NVDA, 458. Snowflake 270. It doesn't get easier than this, guys. I typed this out for you, and this is what you get. 35 to 348. So I'm giving you these things and walking you through it. IV flush on NVDA. 541%. He took NVDA. These are the Snowflake. He took 140s. I called 135. So he went a little bit different on his strike, and he smashed them. 247%. My friend Almond Milk, 29K. Right? NVDA, 235%. 133%. 200, 300, 141. The proof is in the pudding, guys. 200% plus. Right? Open them at 45, he's selling them at 130. Bottom at 45, he's selling them at 120, 145. Babas was 116. Like, the proof is in the pudding. It all comes down to following the flow, right? Yesterday, like I said, guys, DKS, JWN. It comes down to following the volume. Most of the time, it's during the first 6 to 7 minutes, like NVDA was, and like Baba was. But we've had them like PayPal, where it comes in the middle of the day, same way Snowflake did, right? Like, you can see it right here, guys, clear as day. This is a big candle off the bottom at 160, right? 160 all the way up to 180 in the day, but it gapped all the way up towards 172, I believe this is that level. All right, yeah, gapped all the way up to 171 on that first 6 minutes. So you can clearly see the volume pours in. You guys keep asking, what are you looking for? The second I saw this buy volume come in, and NVDA contracts were 35 on a Wednesday, $15 or $20 out the money, knowing those contracts were going for about $8, $9, $10 yesterday, I'm hitting that. Because I didn't think their earnings were that bad, one. And two, that is a Wall Street darling. The people on Wall Street at hedges and firms, if they could get NVDA at 160, they're doing that. They're buying shares, which sends the underlying. The underlying moving sends the options. When you get massive volume on shares, the stock's going to go. What happens to the underlying? It should follow. And what happened? We took those anywhere from 500 to 1,000%. Baba, same thing. Baba at these prices is getting to the point where after a good earnings report, it's hard to not want to buy this if you're a firm. And what happens? You can't, I don't know if you guys are seeing this, but you can't ignore these first couple candles. Look at the volume. Shoots right up. Goes all the way to 95 almost, and it's absolutely butter. NVDA today, Baba today, Snowflake today, DKS yesterday, JWN yesterday. It's one of the greatest strategies. Nobody will tell you about it because they don't know it. I could tell you about the Greeks and show you more into it, but you don't even need to know that. You need to follow the volume. You need to understand what the premiums are now, where they were yesterday, and what they can do. Is the risk reward there? If the answer is yes, do you like it? Everybody's trying to do this now, the IV flush. They might call it something different, like whatever, because they see how successful and often this strategy hits. But at the end of the day, guys, there's only one frog and there's only one frog man. And that's me. And everybody who wants to actually learn this stuff, I do it for free. The YouTube's for free. The Discord I'm on live all day for free. Every single thing I do is free. So if you want to learn and actually soak in information in free game and get paid basically doing it, join the bus. If not, go pay for a room, go get coddled. Either way, I'm still riveting. So have a good day, guys. Hopefully this helps. IV Flush Part 2. Love you.